Hello everyone, hope you're doing well. Today I want to speak about Medifast. As you can see, their value over the last few years, or the price of the stock, has just moved about like crazy, from massive highs to low lows, back to massive highs, and now what I hope to think are low lows again. Hopefully we can maybe see it go up again. But the value here just looks crazy. I think it's seriously undervalued. Right now, I want to show you the current dividend yield. It's sitting at 5.96%, but the payout ratio isn't even crazy. It's at 51%. Now that seems manageable. It doesn't seem ridiculous. And if I show you the growth rates, dividend growth rate at 25% over the last 3 years and at 36% over the last 5 years, they are growing this dividend seriously at an impressive rate. And well, the next quarter dividend is expected to be the one where they typically raise it. As you can see, they've raised it in March of 2021 and of March in 2022, so it'll be interesting to see if they do similar. But right now, yeah, forward dividend yield at 5.99%, just ridiculous levels. And I want to go a bit into the valuation of it here, because the payout ratio is not even crazy and the financials just look so good. If I go over to the metrics here, you can see this is where I like to do my risk management. For each of these that fail, I'd usually add on a bit to the margin of safety, but nothing failed here. You can see that growth rates in equity all the way through EPS, operational cash flow, and revenue are crazy. 12.27% annual growth rate in equity, and then just way in the 20s for EPS, operational growth, and revenue growth. These are all just absolutely flying at ridiculous speeds. And if you think that's impressive, I want to see that the management are investing funds efficiently, and the return on invested capital is sitting at 70%, which is just insane numbers. They're just ridiculous, and it's not even a one-off. This 70%, this has been around since 2019. 70% there 2019, 2020 73, and then it even went up as high as 83 in 2021 and back down to 71.11, which it is now. 70% return on invested capital, and the lowest it's been here is 19%. And what I like to look for is above 10% to see that they're investing efficiently. And I think, well, we can say that they're definitely doing more than that based on these numbers. The last thing I like to check is that they're not going to be in any imminent financial trouble, because I want to see that if they have any long-term debt, I want to see that it's not too much, it's not getting out of hand. I want to see that their free cash flow is able to pay off this long-term debt within 3 years. Well, their free cash flow right now is sitting at $178 million, and their long-term debt is at $20 million. So they're able to pay off any long-term debt within about a month and a half of their free cash flow. So that's not a worry either. So I've gone for a margin of safety of 10% based on that, and all the estimates here are really conservative and there's still value. So the first thing I want to show you is the earnings growth rate, sitting at 9%, the earnings growth rate right now. That is my estimate that I put in because it's in line with what's expected for the next year. Analysts are expecting 20% over the next 5 years, but just the next year, it's expected to go from here 10.62 to 11.72. Ours is pretty similar, up to 11.67 in 2024, but at that 9% rate. So I've gone in line with that rather than going in line with the 5-year estimate, and it's still bringing good value. The discount rate here, I've gone super low. Usually I use a 9.5 discount rate, and that's because I want to see 9.5% return each year. However, if there's a dividend, I usually take off the yield from that discount rate. So if there was a 5% dividend yield, I would typically take 5% off the discount rate I'm looking for, which would bring it down to 4.5%. I've gone for a 7% discount rate, despite the fact the dividend yield is at 6%. And this is because typically the dividend yield sits around 2.5%. As you see, 2.5%, 2%. 1.75, 3, 2.3, 2.7, and then all the way up to 5.69, which it was in 2022, and even higher now. I've gone for 7%. I want to see a 7% return each year, get to my buy value here to check that it's safe, because I think we might see that dividend yield come back down as it's just at such a high value right now. Additionally to this, gone for 5.8% Revenue growth rate, very similar to what I did with the earnings growth rate. This is just what's expected over the next year, but things are expected to increase in the future years after this. But this is going from 1.24 billion to 1.31 billion in 2024, which is exactly what we have here, 1.24 to 1.31 in 2024. Cash flow growth rate kept pretty much in line with earnings, just at a tiny bit higher, and all these values are the current predictions for 2023. Now, moving on to the multiples, this is where things get interesting. Again, I've kept these super low, but let's start with price to earnings. I have this at 10 right now. If we look at the price over earnings, the only time it's ever been below 10 in like the last 10 years, other than right now, was 2020, when look where the value was. The value is down here at 54, and then look what happened afterwards. Hopefully we see similar, maybe it not go ridiculously overvalued in the first place and just go at a nice trajectory would be nice. But 54 it was at, and just absolutely boomed. It'd be interesting to see if it does similar. However, right now, I put it at 10. I haven't gone overly ambitious. I've gone for 10 as a price over earnings, which, if we look at here, the sector median for price earnings is 19.4 and 19 for the forward one. And additionally, their 5-year average is sitting around that 24 mark, or at 20 for their forward one. So they don't usually trade at 10, but I've just gone so conservative in these estimates, and they're coming out, well, the price over earnings is coming out right now at the value it is, even despite being super conservative across all of this. The price over earnings fair value is still coming out at $109. Now, the price over sales fair value at 1.12, which is pretty much in line with the sector median, at $111, and the price over cash flow, this is where things are quite impressive. This is coming out at a 17% upside, with $133 being the fair value, and that is with just a 10% growth rate, which is pretty much in line with earnings, and an $8 price over operating cash flow multiple. You can see this is averaged at 18. This could easily be double. If we were to do that, then that changes the fair value to 266, and that could easily happen. But I'm going to leave it at 8. I want to keep these estimates super conservative and show you just how conservative they are to still be in the green and have a fair value return. So this is without any dividend received, that is expecting a compound annual growth rate of 10.86% from the current market price to our prediction in 2028. So if you were to receive 10% compound annual growth rate on the stock, and then additionally to this you also see a 6% dividend yield, the returns would be super impressive. And I just think the numbers here are so good. I think the value's got great room to increase, but also the dividend just looks like it's going up and up as well. I think things are seriously impressive with Medifast, and this is why it's my favourite high yield dividend stock. I don't discriminate on stocks. I can go for growth or dividend as long as the return in 2028 makes sense, and for Med it does. Let me know what you think about it, if there's anything which you think makes you want to buy Med, or if there's anything which you think I should know, which you should say, hold on a second, have you seen this? Tell me, let me know. But this right now is my favourite dividend stock. Let me know what yours is, and I'll speak to you again soon.